This is Dan Max at eXp Realty, aka the Trading Agent, and this is a live market chat. Wednesday, April 26th, 2023. Hopefully, we're managing positions. You are trying to keep your head above water, being readily aware of what's going on around you, and making sure you trade. Unfortunately, that's what you have to do if you're watching the market. If you are longer term short, I think you can bury your head. You can wake up next week, in May, and probably see you'll be in a better position than you are now, because the market, I think, will go lower. It's just, again, if you want to take advantage of the volatility near term, try not to be perfect, try to be thoughtful, and do your best to manage your positions. If you're expecting perfection and in a probability-based game, please don't even put yourself in that mental position to feel like you can't do something unless it is the best you can do. Because again, I know a ton of people who've been trading in and out of the market and they get remorse if they're not perfect. And what if I would have done this? Hey, you try to do the best you can with the cards that are dealt, and your goal is what? To just do the best you can. I mean, that's literally how simple it is. So if you have any questions, again, this is for you guys, for everybody. We're here to chat. And I'm sorry, I just thought about something as I was about to go live, but it is what it is. So I'm looking for some questions. Can I get a mic check? 1 2 1 2. I'd appreciate such very much. Mic is good. Awesome. So what do we know? First Republic Bank. There's clearly not enough reserves in the FDIC to cover a bankruptcy, or there's not. I mean, essentially, there's just it'd be. There's a lot of. I think there's $100 billion in bailout they might need. Again, the details are hard to know. We're trusting secondhand information, right? Worst case scenario we do know is that the FDIC, no matter what happens in time with all of the banks, they have, there's the banking potential issue with commercial real estate, interest rates changing, the exposure that these banks had with buying crappy bonds with low interest rates that mark to market almost nothing. It's an unfathomable number. So we're not at the point, in my opinion, where I think the government's going to be really too tempted to bail out banks. I mean, especially going into a budget talk. So it's kind of like 2008 and 2009. If you don't remember, all the banks didn't go out of business at once. The brokerages. It was one, boom, down. Then we'd rise, and boom, another one. And then boom, 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 boom. And think of it as like just one after another. And I think what we're about to see is round two. And as somebody who's been warning people, this is a bear market. It is not over by any means. Trying to have friendly conversation dialogues with people who just don't understand the market, who don't understand how it all works, they're going to find out soon that the Feds aren't pivoting. Just keep that in mind. We know that, right? Next week, Fed meeting, 70%, still at 81%. So the odds of a rate hike are basically a lock. Anything over 62.7%, they have not deviated from. So will they deviate now? Again, it's not in their best interest to confuse the market. Keep that in mind. When it's like, that's why I hate watching, people talk about, because again, I don't watch CNBC or Fox and business. It's all a bunch of crap. But they talk about, what are the Feds going to do? What are the Feds going to do? No, the Feds don't disappoint the market. They try to be very transparent, very upfront about what they're going to do. So on that note, what do we now know about other things, right? Interesting, Bitcoin bouncing, right? Yeah. And, Banff, a good question. And the thing that I think is very ironic about a lot of people have not been through a bear market is that most of the traders don't survive the bear market. So there's going to be a ton of people who've never witnessed this or never traded it, don't remember it. So see the I'm buying UEC and others all the time, low discount. I don't know if they're. I don't know why the market makers would be buying anything at this point, because they know the baby goes out with the bathwater. Liquidation is what is coming to all markets. Now, again, maybe those names I'm wrong on, but the odds are no commodity, no nothing should be essentially safe, because, again, redemptions, liquidations, mutual funds, forced selling, whatever you want to call it, everything gets pulled down until the Feds pivot and start providing the unlimited liquidity to backstop the market, and then those things start floating. So I completely disagree. Their market makers are not buying any names, essentially. They have no reason to. They control the market. Why would you need to hold up any name at this point when you know you can get it cheaper later? So that's my opinion on it. Again, I could be wrong on certain specific names, but overall, that's not how that process works. Everything gets liquidated until the Feds pivot. And we know, as of next week, Yeah, of course they got money. They're shorting the market. They're not long the market. They're providing, again, and this is the thing that's great. People don't understand about the market makers is they are going short the market so that they can essentially also control the levels and the action down. Remember, because they need to have natural buying too. They've liquidated longs. They got to go short to what? Control the market. Think of Jessie Livermore operators. They want what? They want to sell prices down to the lowest point that they can get, but they also along the way need to get people to buy so they trap more people. And again, time is part of the trapping too. We've talked about how the markets have gone sideways. So we know about the earnings, right? Microsoft, Google, whatever. Are they good? Are they great? Are they bad? Again, the interpretation of it is really hard to predict, right? Because I could argue that Microsoft earnings being up whatever 2 or 3% year over year on revenue doesn't deserve the multiple they have in it to rise 7.5% today, right? Like, it's just so hard here, and that's why I try to extrapolate to people. Like, don't worry about the numbers. You got to worry about the reaction. The first mouse gets the trap. The second gets the cheese. You don't know for sure anything. I mean, I've literally known the numbers, know what's going on, and still been wrong because I don't know the price reaction. And that's one thing that people just will never understand. Hence why they love to gamble. They love to roll the dice through earnings. You know, hopefully over time you have more wins than losses if you play that game. Or if you're like me, you let the trade play out. You let the market go where it's going to go, and then you trade the reaction. It's much easier. It's safer. Much safer. So now, again, is it as lucrative? Probably not, because obviously trying to anticipate it is more lucrative, but coming after the fact is still pretty good. Singles, doubles, triples, even sometimes rare home runs versus trying to hit home runs or striking out. So at this point, we know the earnings, and this is why I always try to warn people, like earnings typically are bullish because no CEO, no companies coming out and say, we suck, we're not going to make money, everything's terrible. That's just not how they work. So they're all cheerleading, always going to be cheerleading for the future. So that's where it's, you can be confusing, right? So question, thoughts on Meta? Okay, well, let's just jump into it. I appreciate it because I could rant on a lot of stuff, but I think people need to stick around, listen to the whole thing because I'll get into everything at some point. My thoughts on Meta, to me, it has made an amazing run. It's gone from 88 up to 220s. Worst case scenario, it pops back like Microsoft. When you zoom out, because again, whenever you start a trade, zoom out. Is it possible somehow the gap fills at 295 or something crazy? Oof, I don't know. My thinking is maybe you could test the 245 level, maybe the 237. So if you've got longer dated shorts and you want to take some off, I get it. That's what I did. Trade around it. But overall, my anticipation is just like any other tech when it peaks, there's no growth. There's literally no growth. Remember, I told people they stopped paying social media influencers to create content for their platform. So they're not paying people anymore. So why would they post on it? And again, to me, it's a dying platform. Instagram, you can now go and type AI stuff and get plenty of great inspiration for photos. Meta is, I don't know. I mean, it's the advertising on it blows. Economy's slowing. I mean, there's nothing going on. So, but at this point, the trade is just to let it play out. Now, again, if you have some that you want to hold into it, great. But all or nothing trading is guaranteeing yourself that you know what's going to happen. And if you'd be lying to yourself to say you know for sure, I mean, I think they're going to miss. That's why they continue to fire people, lay people off. But how do we know they don't try to cook the books, essentially, right? What's their mark-to-market stuff, gap versus non-gap, all that stuff. It's so easy to play games with, but you're under the 20-day. And if you think about it, like the move looks like it is exhausting. But could it novice gap trap? Keep that in mind. That's what I would do. So it's really simple at this point. Just be conscious. Don't be an all or nothing trader. If you had some shorts, maybe you hedge with some calls. If you got some puts, maybe you take off some and you just let one or two ride. If you have longer dated puts, again, you're going to have to roll the dice and hope it doesn't pop to really get smoked down. So know your comfort level, define your risk. So yeah, Meta has to pay out that $725 million privacy lawsuit. Yep. So there's a lot of things going on with Meta. But me personally, again, I think it's very obvious what's happening with the market. It's very similar to 2008, 2009. But we have like so many things going on because you have budget talks, right? You have a Cold War essentially overseas that could at any point rise and wake up. You have dysfunctional government times 1,000, and you have people pulling money out of the banking system as fast as they can. So where are we at? What are we going to do every day? And that's why I try to explain to people, like, know the trend, know the reaction. The average bear market rally is between 17 and 20%, right? Well, since we had multiple legs, people think, well, it has to be the bottom. Study the past. This is just a big choppy zone. To me, it's a big head and shoulders top. Now that we're below the 20-day, again, distributive. But it doesn't mean that you can't at any point during earnings, based on one company's earnings or one quick headline, get people to rally up and buy the market. That's what's so hard here, right? Sell in May, go away. We'll see. But is the market going to absolutely unload 1,000% big before the FOMC meeting? That's the question. I don't know. That to me is 50-50. I don't know what the Feds are going to say at this point. They're going to say we're going to raise rates and we're close to our terminal rate and that we need to reassess every meeting. That seems like the message they're going to say. How does the market react to that? I don't know. I really don't know. But we do know a few things, right? Let's just go through the evidence real quick. I feel like the dollar's bottoming, right? Major support, didn't even get there, but filled a gap, major level, held. Seems to be holding. We talked about couldn't get over the 20-day. Well, not surprised. Seems to be just chopping. TLT in a big range. 103, 109. In between it right now. If bond yields start going lower and TLT screaming higher, yeah, market's going to be peeling like an onion. But could the market peel like an onion last year when rates went higher? That's always possible too, so that's hard. The VIX, we told you guys. This is a gift down here, right? But what typically happens after the first bounce? You get some like pullback, chop back. Could it be next week? From what levels? I don't know where the market will be. Right? I don't know. Trying to think of, like, here you go. Like, could we get this and then go? Or is it this and go? Or is it this and go? Again, that's where trying to buy the UVXY, really getting short and not expecting any rebounds back is kind of silly. So that's my concern with that. Microsoft, is it a good short? Well, if you watch the daily market review, Zach, you know what we thought about Microsoft. Said very clearly, there's what? A gap from the past. The gap is the gap right there. You are now filling it. Now remember, day one after earnings, is this a novice gap? Probably. But could it do multi-day before it drops? Like, could the market makers try to kill the IV and the options and get people to buy puts and then hold it up before it goes lower? That's what I'd be thinking. So, it just is what it is. I don't know, Tim, what you're talking about with Chipotle. A lot of stuff. A lot of things going on, my friend. Bill Ackman, don't care. I don't watch the news. I could care less what Bill Ackman does. I remember him just getting absolutely beaten with Herbalife shorts. He's a fucking clown. Excuse my language. Yeah, so I'd be watching it up here. If you want to short it, define your risk. I mean, I don't think it's dangerous at all. I mean, this is the thing. I think people need to stop, drop, and roll. No, they need to just think about the market from the bigger perspective. Right? Like, zoom out. Like, you've got tons of monthly resistance right here. Is it going to go down in a straight line? That's the question. Well, it's better to be shorting up here with defined risk, anticipating lower lows later, than not. That's my guess. That is my guess. Is Starbucks a good short? Because a lot of people have been talking about it. Yeah, I mean, it's had some fibs. The monthly. I mean, you can see there's areas here. Let's just go to the... Let me go check the weekly. Might be able to see a little better. Yeah, I mean, you're into the zone, right? You've got... Man, you could probably get even up to... Somewhere in this box, right? Is probably the top. The daily, though, is what's interesting. I know a lot of y'all are watching. I talked about, like, it's at a... You know, it's at a fib extension. But it's making slightly higher highs. This is the hard part, right? Is that people seem to be funneling into food, you know, food, service, beverage, whatever. When is Starbucks' earnings? That's probably the better question. It's probably, is it next week? I just don't see it dropping until earnings at this point. It's holding up. Now, could it, obviously, the market pull it down? Yeah. But is it absolutely, like, again, if something's strong holding up in this market, people are more likely to try to hold it going into earnings, right? If I'm the market maker, right, like the best liquidity would be for what? To hold it up, to unload now or to unload it on earnings. So it's a tough one. It's your call. I think tech is just, okay, yeah, Starbucks next Tuesday. I figured. I feel like the obvious one is just tech. I mean, before I even got in here, I was adding NVDS at 1640. It's like gift from the gods. You know, financials. Oh man, really want to see JP Morgan, right? Get back up here, chop around, but now it's at support. We talked about the XLF, 3250 to 3350 area, right? Chop, chop, chop. Really wanted to see the 50-day. And guess what? Didn't happen. That's just part of the game. I mean, as much as you and I would like to say we know for sure anything, we don't know, right? Like, we just don't know. That's just the reality. You try to do the best you can with the best of knowledge you have and whatever. I mean, just, again, everything's pointing to lower lows coming in the market. It's just where do you want to short and what do you want to short? Pick and choose your names well, right? Yeah, I mean, that's the thing. I mean, I still have some of my FAS short, but I would really wanted some JP Morgan because I think their net interest margins are about at the peak because they're going to have to start raising interest rates for competition. People will start taking their money elsewhere. So at this point, again, I mean, you got Apple flatlining, 20-day, right? NVIDIA seems to be playing games around the 20-day, right? SMH we talked about was dead. Dude, done. Done. Said it probably would bounce around in this area. Well, look what we're doing, right? Chopping around in that area, right? We talked about commodities starting to weaken off. Said oil could lead the market. Well, there you go. Talked about solar at some point was going to get absolutely throttled and smashed. You're welcome. You're welcome. So, I mean, it's just one of those things. Pick and choose your poison. I personally think, as I've said 1,000 times, there is 10x the amount of money that is sitting in tech stocks versus materials and commodities, industrials. So, I know that there'll be longer, drawn-out fund flows leaving tech. But who wins a tech war? If you haven't watched the video, it's posted, highlighted on my Twitter account. It's the top post. It's not tech. It's the inputs. So, how about Lulu? Again, you guys are playing with fire here with retail names. I don't know why you're even thinking about Lulu fucking Lemon. Excuse my language. Tech. If Lulu hasn't had earnings, or is that their earnings? I mean, the area makes sense. The easy short is tech. It's so obvious. If each individual retailer and name will have their own story. Now, yeah, I mean, it looks like it makes sense here. I see why you look at that. Again, you get too washed out with too many names, right? Scott, get out of here. You're a clown, dude. Meta 250. You're making me laugh. I see your red nose and your 250. All right, well, maybe it does. If it does, I'll give you all the credit in the world if it hits it. I doubt it's going to get there, but whatever. It is what it is, man. Long dated puts, Junes. I think we'll be fine. You're making me laugh, dude, like a clown. Meta 250. In this environment, burritos to 3,000. Apple to 250. I mean, I don't know. Let me just pull a number out of my magic hat. Right? I don't know. NVIDIA 500. I mean, it just, why 250? The gap on Meta, I guess. I don't know. You're just making me laugh, dude. You're killing me. Anyway, but glad to see you here, man. Hopefully you're doing well. Oil's been pretty volatile. And again, I think it's funny. We talked about oil, how it would not hold up. If OPEC is cutting 1.5 million barrels, they're probably going to do more cuts because demand is drying up. The economies are weakening. I mean, diesel demand is just falling off a cliff. Transportation costs per mile have cratered, collapsing. So, of course, demand for fuel is going to do what? Rig counts are down too. I mean, that's demand. But I mean, I think we know as well as anybody, you would understand this. The rig counts are down because of people in charge are idiots. They should be up and away. Right? Up, but they're not. Drill, baby, drill. I mean, as much as we all want to see green technology take over. I mean, you have to have a transition plan. It's just like, oh, go green. Go team green. Good luck getting there. You're just going to shut off the power for 3 years and then turn it back on with a green? No. Again, that's why I don't think a lot of y'all are familiar. I really like that Flex LNG. I know a lot of people in Congress are looking at it. I think we're going to be exporting a ton of natural gas at some point. Because everyone's going to be like, oil's so bad, but natural gas is good. It's like, Yeah, no, I agree with you. Windmills just rust and sit in a landfill. Yeah, they're not. We need more and more power. We need like more nuke. And that's why I agree. Like, I mean, I think uranium makes sense. But again, I don't know. Are we going to find cold fusion? Are we sitting on technology? I have no clue. I have no clue. So they want to go military, go electric by 2030. Oh, God, the military electric by 2030? I mean, imagine you're at war. Are you carrying around a bunch of batteries? Where are you going to be able to plug in? I mean, it's like the same problem with, in the world wars, like who's got the fuel lines, right? Do you have access to fuel? Hey, let's just charge our Humvees, guys. Let's just let them sit in the sun and roast for a couple hours. We'll just sit here and drink some margaritas while we're at war. We'll just, hey, guys, time out. We gotta charge. Time for charging. Can we all agree? You guys go charge your batteries. We'll charge ours. So friendly, right? No, not at all. So, any other questions, thoughts? I mean, any other comments that'll make me laugh? Man, life has been rough for me. But this is the thing I think a lot of people realize. And this is what I'll tell you. If you're ever having like really harsh, dramatic problems in life, do not trade unless you're comfortable trading and you can stick to your plans. Because if anything, partially trading has been very helpful to keep me focused. So, anyway. Yeah, yes, uranium in the forecast to get demand. Yeah, I agree, Tim. I mean, that's why, your names, I don't doubt for a minute. And I don't know, I don't know everyone's handles. What's your handle, dog? A lot of people know that my watch list, when the bear market bottoms, the VIX, not even the bear market, when the Feds cut rates, the daily market review is going to be all commodities and industrials. Like, here's my watch lists. All... I have no desire to play in the tech space, that sandbox. So, First Solar earnings. That's why we are going to have 15-minute cities. Yeah. What about it, Kareem? As well as I do, this is like a favorite. Man, when I look at it holding the 50-day, yeah, man, I know they got earnings. What is it, tomorrow afternoon? I will be maybe on a live stream poker at the lodge tomorrow. I'm an alternative. Some of my buddies, Roger Battles and Ryan Pedigo at the lodge outside of Austin, will be live streaming. I'm going to support them just to get away for a minute. But, man, this is a gamble. Speaking of gambling, right? I would prefer, man, this is just a tight trading range. You guys know who watch this. I'm like, people are like, don't realize, like, First Solar can have $100 a month down. Right? Like big moves in a month. So I got out of solar and having just playing more with leveraging tech shorts. Now, obviously, regret, right? Remorse. But I can't do everything all the time. But if you are in First Solar, what do you think, man? I trust your opinion. Do you have an opinion on First Solar? Because I don't like this wick right here. Little suspect, right? It feels like it's trapping buyers because, again, First Solar has just been one of those names that people are like, oh, I gotta buy it. It's the best solar. And it's like, no, solar's gonna suck. Again, they may have a great quarter, but I don't know. Like, their future to me looks gloomy. First Solar hold up before the dump. I tend to agree with you. You sold a put yesterday, holding on. Okay, cool. I think those are smart ideas. I don't see it melting down from here. But, man, could we fill this gap on earnings? This is going to be the hardest part Thursday afternoon, is that you might get the extremes after the market closes, right? Because remember, think about, if you're not familiar what's coming on Friday, you've got employment costs, personal income, personal spending, PCE, core PCE, Chicago PMI, University of Michigan. So what happens Thursday night to Friday morning could be incredibly, like night and day, right? Like, we could go to sleep and everybody's maybe feeling a little better, and then you'll wake up Friday morning and it's just like, oh no. Yeah, the volatility, the options are really expensive on First Solar. So who's going to be buying in a bad economy? Tim, what are you referring to? Are you talking about just in general stocks and solar? This is the thing, right? Like, unless builders are putting them on, which they're not, you need subsidies from governments. If governments start cutting subsidies, the Republicans owning the House, again, it's really hard to know if they can repeal any of the subsidies. But overall, everyone's trying to funnel this. And the problem is that governments don't have endless spending. At some point, their bank Roll is going to tighten up. Going to be bad. I own Fluor short and would sell half and keep here. I'm assuming First Solar, not Fluor, the company. Not going to gamble for earnings. Yeah, I hear you, man. That's how I feel about it. Like if it presents itself like $100 bill in front of my face and it pops the 210 or 215, 20 day or whatever, I will probably try to short a few shares. And if it pops, man, the puts will be so expensive. The play would probably be to sell a call to buy a put. You know, sell a near-dated call to fund a long-dated put in the money or at the money. I don't know. I'll be out of town Thursday, so I won't be back till Friday morning after the open. So I probably will miss that trade. But if you hit that trade, let me know. I'm curious to see how that goes for you. I wish you well. Yeah, commercial real estate. I mean, I've told people, and this is the thing. I know, Kurt, you follow, but I've tried to post to you guys, like, Denver market historically last couple of years has been incredibly hot, right? People want to move here. Like, that's the demographics. They're expecting 10 million people to move here in the next 10 years. So we've got sustained buyers, right? I'm seeing price decreases, and I'm seeing stuff sit for longer than I even remember here. Now, again, I was in North Carolina doing real estate during the previous housing bubble, but it was different. I think affordability on the higher end is what takes the bath here, and people still are going to try to buy the low end stuff. It'll hold up. Do I think we take a massive bear market in housing? I mean, I think we all know at the end that they're going to cut rates and try to spur inflation. So I think that's where I'm trying to find the middle here. I'd love to see houses pull back and maybe fall, late summer, try to scoop up some good deals. But yeah, the banks are sitting on so much dead money, man. So much. I mean, think about all the commercial loans. Think about all of the debt they have that has no market for it because it pays low interest. Like, who wants to buy something yielding 1-2% when inflation's at 5, 6, 7%, depending on where you are? And if it's Europe, I mean, you're looking at 10% plus inflation. Like, who wants negative yielding debt? Ugh, it's worthless. Might as well just write it off as a total L at this point, right? So, I mean, at this stage in the market, are you surprised it's a little chopping today? No, I mean, again, they're going to try to pump the Microsoft headline. Guggenheim is flat. Meta's slightly up. Apple's flat. I mean, it's interesting. We're looking at oil and gas peel back. Gold popped, flopped. SPY's been up and down. IWM has been lagging. As we've said, again, this is what's so crazy about the market. And this is where experiences teaches you, like, man, I would love to be able to tell you guys, check out my recap as of Thursday. This is going to be the top. But what do we say? Like, break the trend, then watch out. Look, boom, yesterday it's done. And I said in the review last night, I said, probably going to chop around here, if I had to guess. Now, could it just be a day or two? That's the $1 million question. I mean, I personally think that, this could be your favorite, the Doji Sandwich. Yeah, the Doji Sandwich is a formation of a big candle with an indecision followed by the continuation candle. Right? Y'all know that voice, so. Do you watch SSR institutional action trades on the name before placing your trade on saying something like FS? I like watching Fintel. No, I keep it simple. I'm pretty old school and simple. I'm usually early and I just accept that. I define my risk and I just do what I'm going to do. Because again, I used to have connections, the ability to get what I thought was inside information. Even when I had inside information, things did not work out as I thought. And here's the hardest part is that the information you are getting, how do you know if it is completely true? That's what I always warn people about, like, paying for services. The information you're getting, you assume is true. You assume it's best, but you're not guaranteed a result. So adding layers of complexity can be really hard. So I'm the KISS method. That's what, again, newer people have newer techniques. Do they work all the time? I feel like my stuff is pretty tried to tested for the longer term markets, bigger trade action, intraday stuff, not so much all the time. Again, when I started trading, liquidity in the options was literally only big dogs. So you could really use the liquidity. Now it's just how to trap as much retail idiots trading options or, whatever indicator you're looking at. Like, I personally don't believe really many indicators at all worth a shit. I like volume at price. Makes sense to me. I like levels. I like fibs. I like moving averages. But they're all references. They're all references. That's all it is. So, That's all. Sorry, my wife was just texting me. What do you think the discount for bad credit score increased rates for good credit will do for the housing market? Oh man. Yeah. Yeah. I don't even I'm like speechless. I'm like, choose your words wisely. Don't go on a rant of negativity and cursing. I think it's not right. Again, because they tried to do the subsidized housing right back in the day, doing what? No doc, low doc. You just do whatever you want. Yeah, I don't want to get kicked off YouTube. Thank you. I think it's not fair. Penalizing people with good credit and rewarding people with bad credit, because the people with bad credit probably still don't have the cash down payment. It sounds like what the Clintons tried to do in the 1990s that created the housing bubble. I don't know if y'all remember, they had a lot of fair housing stuff that literally gave people keys to houses that did, who says who should deserve it? It all should be based on money. That's where I always tell people, in real estate, all I care about is green. People are like, oh, people always, because you run into people who are racist, right? You're going to have people you might interview that might ask you to get involved in their process. And you're like, listen, have no prejudices. Endlessly not. It's all about the green. Can someone afford it? Are they a good buyer? We talk to their lender. What's their credit? You make the decisions when you're getting multiple offers. Well, all that kind of stuff. It's all about the green. And now you've just made the playing field so that people with green are going to pay more, and the people who don't have it now become risky. And now, again, you're putting yourself in a position where the housing market is going to be, potentially owned by a lot of people who are just going to be able to walk away. Now, you might not feel the effects now, right? But does this? I really struggle that this is going to even survive. Now, they might remove the penalty for good credit scores, but they might keep the subsidy for people with worse, which, will create another bubble. And it probably creates another bubble at some other point. Wonder if it's even legal? I mean, what is legal these days, right? What is technically legal and illegal? I have no clue. I really have no clue. I struggle with how administrations can just pass laws with bypassing the government, right? We go to war. We spend money. I mean, we're literally handing out money to foreign countries and nobody's checking it out. So, yeah, make the rules up as you go. Again, I don't like to be political. And a lot of people are like, oh, you must be this and that. I'm like, both parties are an epic disappointment. Let's just call it what it is. They're all getting in power, and then they all get rich off of trading, which honestly, that's probably the thing, right? I should get into Congress and become the trading congressman. That might be the best ploy. And I'll just this is how you trade. All right, I got insider info. I'll sell you for $5,000 a month to join my Discord room. And you can make endless money, like myself and my compadres in the House or the Senate. Builders like cooking the numbers if they were talking about this morning. How can the builders be up so good? Tim, no, I disagree. They're not cooking the numbers at all. Builders have seen this coming for 18 months. The builders have cut inventories. They have stopped buying land. They have reduced their orders to only people who are putting down big deposits and guaranteeing to build. It's a totally different thing with housing right now. It is not, the builders are not, in my opinion, cooking the books. Now, some of them, we can't say not all of them, but in general, no, they're not. They have seen this coming from miles away, literally miles away. We knew it's a bear market, right? So their idea is to, again, they're not going to spec build. They're going to try to minimize their cost. They're not going to order inventory. They're going to take longer to build. They're doing everything they can. But it's kind of like what DHI, I haven't looked at them. DR Horton's not really a good builder in my opinion. Sorry if anyone owns some of their houses. They might build some good houses. But, I mean, yeah, it's double topping on the monthly. Novice gap up. Now, again, if you decide to short it, it makes sense up here. Check out the monthly. I appreciate your interaction and get involved. Just asking questions, because if no one's talking, man, you and I can just shoot the shiznit. It makes sense. They've been holding up really well. I'm telling you, like I said, that they have been doing well, right? They have been doing well because they've been way ahead of this. Way ahead of this. And they're also doing certain things, like they're offering in-house lending, too. Some of them are literally doing 4 or 5% loans just to sell the house. Again, they'll make tons of money on the interest, or they can sell the loan. So why not underwrite the loan to sell the house? and stabilize their pricing. That's what's crazy is some of the builders, not all of them, certain projects are placed, their prices are still pretty high. And then obviously they're cutting the quality in some places too. What can you say about FRC? Said it earlier. I mean, I personally think, again, there's not enough money to backstop what's going to happen. I think, like most things than not, they're going to try to, like, they're going to do nothing. You're going to hear a lot of rumors, and then Friday after the close, then you're going to hear what's going to happen. That's what the market's really good at doing. It's kind of like, you know, releasing bad news on a Friday afternoon, firing someone after work, or like at 5 o'clock on a Friday. They don't have to come back into work tomorrow. There's no anticipation of anything because it's the weekend. That would be my guess. Do I know what's going to happen the next? Again, I have no desire to buy it. I think if anything, like every bank, the stock in itself is worthless. But who knows? Do they get a capital infusion? I mean, I'd be looking to short whoever invests in them. That's probably the next idea. But again, as I've said, I think this banking stuff is very similar to 2008, 2009, where it's a domino effect. And it's not one day after the next. It's like a couple months, boom. Couple months, boom. Couple weeks, boom. Then, dink, done. Government's got to step in, insure everything, do everything they can do to, like, again, I don't even know how they can. I mean, they're so tapped out. This is going to be a while. There's probably going to have to be a bail-in. And I think that's why people are pulling money out of the banks. If you're familiar with a bail-in requires that what? Deposits be used to backstop the government. Our public deposits. Yikes. Yikes, what if they said we're taking 30% of all deposits? It's happened in history before. That's where I am warning people, please have your gold, silver, have some cash, have some stuff in your pockets. And again, and if the hardest thing is like betting on the end of the world. You can make a lot of money, but how good is, what's the world going to look like after the fact, right? Well, great, you made a bunch of money, and then all of a sudden money's worthless, right? Or this happens. I mean, again, that's why I'm telling people, that's why I am the trading agent. To buy real estate, buy real assets, for the love of God. Your capital, cash, your 401ks, your IRAs that are in the market or in stocks or in cash, kapow, at any point. But they're going to have a hard time stealing your house, or stealing your metals, or stealing your crypto, if crypto is one of the winners, or stealing your crops, or stealing your land. It's going to be a little more of a battle. That's all I can really say on that. It sounds really bleak, but that's just the reality. Tesla. Lagging. We talked about this lagging. I mean, how many people here remember over the last couple weeks, I'm like, the trolls are getting really loud, guys. We must be at an inflection point. People are going nuts. People are like, absolutely is a bull market. Remember how we talk about this, the emotional effect by the retail traders, the retail public, the stock twits, the fin twits, the twit twits, who are just like, it's absolutely a bull market. And they're the same people, it's absolutely a bear market. Tesla's going to zero, right? Like, I mean, you can just use that as an example, Tesla, but look where we're at, right? Like, and that's why I always tell them, I love the trolls. I love the trolls, yes, very much so. I love the trolls. Because again, they're usually the ones, and again, I don't know if Solomon's ever listened to this, but every time he posts, I mean, now that I know Eric's here, I mean, you literally can, like, remember Game Over Candle? What day did Solomon say, I think it was this day, that Tesla was going to 250? Trolling hard. Yeah, upgrades galore. And this is the thing too, Bam, I'm glad you said that, because one of the things that we've seen in the last 6 months that allowed this is that, remember, all those brokerages downgraded everything in September and October, November, December. Now they're flipping to upgrades all at the high. It's like, you smell that? You smell what the rock is cooking? That doesn't smell like the future bull market. It smells like actual pain. I have tops marked on my charts attributed to various trolls. Yeah, I mean, I probably should do that. But again, I don't even want to, like, harass anybody. I mean, someone wants to take the time to attack me, I'll mess with them a little bit. But in general, I got better things to do. But it is rather ironic when you go back and you study the past and you see where certain people who have been highly emotional, highly reactive, read the news, believe the masses, again, never understand that the person who is the lone wolf usually has the ability to precede the big move and make the big money, right? But anyway, so JP after numbers. Tim, I think it's obvious that they're going to raise rates. And then they're going to say, we're going to be, we're looking to stabilize the market. We're going to be like, hey, and they're going to say things that relate to, like, we're going to try to create stability and we're going to be data dependent. Because remember, if they announce a rate cut, that means just like OPEC, crap is getting bad. So they got to be careful. Because if they say that, what could happen? Boom. And that's where maybe the market drops and then we chop a little longer. Maybe we have to chop into May, chop into June. It's tough to know for sure. It is tough to know because I'm trying to remember. So you got the May meeting. Then you got, when's the next one after that? June 23rd. Oh, man. Sorry, June 14th. So you got 6 weeks. Smelling the cocaine, they are. I mean, as someone who used to dabble in such drugs in my younger years, cocaine, hell of a drug. Now, I don't even know what it's like, but the old stuff seemed pretty safe. It's sad to say. I don't know. I don't show many people my troll tops. Pull your... Oh, man, I can't say that. Yeah, Banff, old effing guy. I don't know if he's probably trolling in here. He says he works... He's worth $1 billion on stock twits, trying to tell people how to trade. Old effing guy's like, oh, it's always a bull market, only going up. Always going up. Ugh, you guys are idiots for shorting. It's like, okay, dude, trade the market. Again, anyone who promises you certainty is certainly a fraud. Coffee is my fix. Coffee is mine. Every once in a while, I like to relax. I don't drink. I'm not a big drinker anymore at all. I mean, I'd have a glass of wine, maybe a beer, but I don't mind a little edibles or some microdosing mushrooms now that's legal in El Colorado. So, again, I mean, it's right now, this podcast is sponsored by Sobriety, 100%. This is how I naturally am. So, every once in a while, there may have been a recap I've done on an edible, but you probably could tell because I'd be just literally laughing half the time and not really making, and it'd be 45 minutes versus 20. So, any other thoughts, questions? If not, I'll just wrap her up. I mean, I think, man, Intel low of the day. I prescribed Adderall, Ecumeth. Yeah, Psychocelin, dude, it gets me in my heart. And the guys that know me and friends, I need to be in my heart because I'm dealing with some interesting times in my life. That's the best way to describe it. Moo kills me, he loses more money. Moo kills me. Moo. Maybe I don't know that. Appreciate your insights. Hope to help you get through as much as I help everyone else. Yeah, I mean, that's the goal here. And so, James, I mean, everybody knows what we've been talking about. Market, going to be volatile. Trade around your positions. Again, I would love for the VIX to untighten and go screaming higher, get the bear market over, dump it, be done. But the thing that I am really hoping ultimately happens is what? We have a really good trading market. You get down, you get some pops, you get some down, and you're able to trade around your positions. I don't know how many of you guys are... Now, again, I've always said 10% of your trading worth should be in options. The other should be 90% should be in stock. If you don't know how to sell covered calls or covered puts and sell premium along the way, man, you can really scrape in some pennies and dollars here along the way and keep your positions or manage your positions, roll them out. And again, remember, velocity makes you have to act quicker. I don't mind slow and steady. I don't know about you guys, but I like to be able to feel like I can walk away from the market for 30 minutes, an hour, and not thinking about it with an anxiety of oh crap. Did Meta just drop $5? Do I need to take some profit? First Solar just dropped $30. Crap, could it bounce? Because remember, when the VIX expands, you're going to get moves big each way. So that's why a VIX in the 20s could be kind of fun. I got hit hard a little bit as my buying puts him at just oh yeah, James, my options account got absolutely smoked in March, April, and then I was trading around my stocks. Then I obviously defined my risk, and some of them got options just were absolutely, and so I've been funding my options trades with the trading around my stocks, and then trying to buy June, July puts. Again, and that's why I say 10%, because if you lost 10% of your account and say just something you were just dead wrong on, or you made some mistakes, or something happened you can't control, it's not your whole account. Because that's what happens to people is they get really aggressive in options, thinking that they can always be right. And I'm just telling you right now, it's the timing is the hardest part. Who would have told? If I would have told you in December the market would be near or at the highs of the bear market rally in May, I'd be shooting no way. I'd been 0% chance, zero, zero. But guess what? That's what it is. And if you didn't trade around your position, you just held, man, you got destroyed completely. And again, this is the thing about options. In your mind, you always have to think that they could go to zero. If you start putting that in your belief system and say, I can be wrong, time is not my friend, and you start just thinking about it from that perspective, you're not going to like sit there and go, oh, options are the best trade. Again, I'd rather trade stock all day, every day. What are most of your stocks inverse ETFs? Yeah, right now, SQQ, monster position. SOXS, huge position. NVDS, I took a lot of profit off and then was reloading today in the mid 16s. Big. I've got short stock with Apple. I've got a little with Meta. I just have a lot of those leverage ETFs. I just don't know why I would try to pick the individual names. And again, then I have puts in various names in tech, and then I have a little bit of FAS short as well. Again, I really want more financial short. Didn't get it. Would really love to have some solar short. Didn't work out. So that's where I'm just sticking to, again, for me, at the best risk reward without being too far off the middle. Because again, I'm one of those people, like, I just don't chase because I don't, again, imagine if you shorted Microsoft before earnings, like fully. You'd be sitting there going, toast. So that's where I'd rather leverage ETFs, the bigger move, and then start picking and choosing names along the way. Morgan Stanley, what about it? I mean, it looks like a Head and Shoulders complex. I mean, again, I think the thing that people who are newer to trading, newer to the channel, just need to realize about the financials, why I'm just sitting here like drooling like a puppy over financial shorts, is that we are retesting the 2009 highs. We bounced there, right? We bounced to the 20-month, hence the short of the century, I thought. And now we're about to go into a banking issue, some banking issues. Oh, yeah. Oh, yeah. So, I mean, pick and choose how you want to do financials, right? Like, I mean, this is what's so hard, right? What's the right answer about what's going to happen in the next couple months? The question is what happens the next couple days, right? Because I would love to see the market drop and then somehow they reel people back in early next week or whatever, chop around. Say we make some sort of lows, we rally back because the media starts going, are the Feds going to cut rates now? Which they're not. They're going to pretend, they're going to talk, and they're going to, again, people are going to come on TV, and then people are going to say certain things, and people are going to get excited. That would be, to me, the better trade. Like a Monday, Tuesday pop. I mean, is Apple next Thursday or Tuesday? Again, I don't have my earnings lined up for next week, just for this week. But yeah, the recession trap, absolutely. Yeah. Like them say, like, we're not sure about a recession. Like, again, the more they deny, the more that it's likely going to happen, in my opinion. Right? For them to, like, admit defeat right here, it's not really in their best interests. Because then the market could absolutely get destroyed. Like, they really want to... They want to they want to have their cake and eat it too, both sides, right? So, any more thoughts, questions, concerns? Just be careful. Again, if you want to short stocks, go right ahead. I prefer to short or go long leveraged ETFs because if you're going to get the 3-to-1 and you're going to get the big move, well, then you don't have the individual name risk. Now, again, there will be certain financials that I think will go to zero or blow up, or certain tech names that are going to you're going to go, whoa, I did not realize that could go that low, or certain names. Because keep in mind, when the emotion hits the hardest, nothing is safe. Like, I mean, if you never lived a massive VIX spike, it will literally blow your mind how fast people will all sell. And they just pulled the bids. It's like, I mean, it's literally like, terminal velocity. Just, stocks that were like moving $5, $10 in a day or a week start moving that in minutes. Like minutes. And you're just like, what do I do here? You sell something, you buy, and you're like, I mean, your head's going to spin. And hopefully when that happens, I'll be here and help the best I can. But you're going to have to be decisive and know that you are absolutely going to have levels that violate something by like a couple bucks, and then it just right back around. Right back around. Like, you're going to be like, okay, level support. Hey, Meta's going to 250. It could go up to 270 and then pull back to 230. Like, pretend if it was like later in the trend, like this was coming down off the highs. Like, that's the kind of crap you'll see. I want to buy to control myself. Yes, but in the crash many times. Traders market, not investors market, but some got me wanting to buy, got to control myself. I mean, this is the hardest thing, right? Because I can see why people want to just buy stuff and disappear, right? That makes sense, because then you can not watch it and you feel you're creating your uncertainty. But in a probability game, you know the odds of smash crash coming, recession trap, all that stuff. It's just trading around it. And that's why some people aren't really good at shorting. And again, shorting's not an investment either, right? It's a trade. So that's where if you want, I've told some people just go to cash. Like if they can't handle this traders market, well, you will know. A bear market bottoms when what? Bulls just give up. Retail traders disappear. Like I'm assuming Wall Street bets literally could close down. I saw stock twits almost go under in 2008 because nobody was posting. You're going to see, when people jump off buildings, sadly, yes, that is something, James, that probably will happen. And you're going to see bears just thinking, we can't lose. I mean, it's no different than right now. Like perma bulls are like, oh, we can't. It's bull market, you dummy. Why would you be shorting stocks? I mean, every day, you're an idiot for shorting stocks. Okay. Now, again, I admit I was early and I stopped out of some things, and that happens. It won't be the first or the last time that ever happens in trading. You have to be honest with yourself. Again, have a freaking journal. Have a journal. Remember what it's like to be early. How did you handle it? Why does this happen? What can you expect? Because again, if every time you're trying to decipher the market based on the evidence you have now without any history of understanding previous things, then it's hard. It's like making a decision based on one set of evidence. Always. Excuse me, I had a sneeze. So, all right, I'm going to wrap it up. I appreciate you guys, all the love, support, the generous donations, the nice comments. Again, student is ready, teacher appears. This is not going to be mainstream. This is just going to be me, and at some point maybe I'll go private and and close the Discord room down. But at this point, I'm trying to find the people who are committed to being the best traders possible and then helping them out. Because in the end, I'm only two set of eyes with one brain. If I can surround myself with 20 or 30 other people that get this, who have the experience, the understand how the markets work, then we're all going to help each other make money. That's just the goal here. Because it's one of those things, like getting rich, everyone wants to get rich. The goal is to build wealth. That's how I look at it. Like, because if you get rich, great. Like, no one's going to doubt. Like, you probably could get rich during this bear market smash. But sustained wealth, how to do this, make money consistently forever, that's the real goal here, y'all. So, on that note, thank you again for all the kind comments. You guys be well. If you have any questions, you know where I be. You can get a hold of me. Talk to you later.